Why I'm bullish on Alibaba's the BABA stock analysis. Hello, everybody. This is StockerFinance. I'm your host, David Scheuer. Make sure to follow me on Twitter, twitter.com/StockerFinance for more information. So Alibaba's stock is down about 3% today to $257 a share with a market cap of $696.3 billion, a PE ratio of 34, 52-week high, which is down from of $319 a share, but a 52-week low, significantly up from $169 a share. If we go ahead and look at the past 5 days, it's down just a little over 3%. Since the coronavirus crash back in March, which was a 52-week low, it has increased over 45%, a nice recovery there. If we go ahead and look at Amazon, it's increased 102%, however. And later on in this video, I'm going to do some comparisons to Amazon. It's really good when you do analysis of companies to make sure and analyze them and compare them with similar companies in the same industry or competitors, etc., to get a kind of a view on whether and an understanding of whether the company you're doing an analysis on is undervalued or performing well or whatever the case may be. Let's go ahead and dive in, though. It actually had earnings report today before the bell. It beat the estimated earnings of $3.25 per share. Actual earnings of $3.38 per share, though. So not a huge beat, but a beat, and that is great that it was increasing quarter over quarter as well as year over year. If you care about the analyst ratings at all, it remains at 94% buy rating. I personally do not care about the analyst rating since I do my own analysis, and I encourage everyone else to as well. Some great news from the cloud computing front of this company. This is an article. They said the Chinese e-commerce giant made some progress on the earnings front, including by reporting its first ever quarterly profitability for its cloud computing business on the basis of EBITDA, which is earnings before interest, taxes, and amortization. Through the company also spoke of plans to continue investing in growth areas across the entire business. That's incredible news for Alibaba that their cloud computing business is continuing to grow and has actually experienced its first quarter of profitability. I did not expect them to have their first quarter of profitability this quarter, so the fact that happened is a great sign for the company. I'm using hypercharts.co here to dive into some of the numbers here. In terms of users, they did a monthly active user base for mobile of 902 million, which is incredible. Nearly a billion people continuing to grow significantly there. Annual active customers are at now 779 million, which is up from the previous quarter as well. So steady user growth across the board here. That's an insane amount of users there. I mean, monthly active users, 902 million. Annual active customers, 779 million people. That's incredible. The revenue segments also skyrocketed this quarter, largely due to the holiday season, shopping, etc. Grew to 33.88 billion US dollars. That is up significantly from $22 billion. Most of the growth here came from the core commerce business, although we did see growth across all of the revenue segments, but most of it came from the core commerce business, which makes sense when you think about the holiday season, spending, shopping, etc. right now. On top of that, operating expenses increased as well, but not nearly as much as their revenue. So operating expenses increased. And this is actually really interesting when you look at this, because product development, and if we go ahead and look at the previous quarter, product development was $2.834 billion. Sales and marketing was $2.5 billion, and general administrative expenses was $1.7 billion. Now, they actually decreased the general and administrative expenses to $1.3 billion. They also decreased their product development to just $2 billion, but their sales and marketing shot up to $3.8 billion from $2.5 billion. So that's actually a really good sign, because general administrative, geez, stumbled my words there. General administrative expenses, that is a hard cost to cut. That means firing individuals, cutting office costs. A lot of that could be because they're no longer operating in an office, perhaps due to the coronavirus. I'm not sure how that's working over in China or not, if that's similar to the US or not, but they cut that significantly. They also cut back their product development. That's a good sign, in my opinion, that sales and marketing was the only thing that increased this quarter as the other expenses decreased, because sales and marketing is one that's rather simple to decrease the operating expenses, whereas G&A and product development, especially G&A, that are significantly more difficult to cut those costs back. Growth experienced immense growth this quarter, 46% year-over-year revenue growth, and also we have operating expenses growing slower than revenue growth, which is a great sign, and trending downward at 44%, while revenue continues to trend upwards. Revenue and operating income grew to $7.5 billion, with gross profit growing to $15 billion. Net income skyrocketing up to $12 billion this quarter. That's just incredible there for Alibaba, and a lot of that is due to their just incredible margins. Their operating margin, 22%. But the more impressive one is their profit margin at 35, almost 36% profit margin. For this company and this industry, that's an incredible profit margin. And we'll take a look at Amazon's margins in a bit here, because their margins are completely just not even close to where Alibaba's are at right now. And it's super interesting, the differences between these two companies. Now, if we move on here and look at the cash position, it grew to 47 billion, 47.8 billion to be exact, which is a great sign that continues to grow as well. And now we're going to dive into their earnings report, which was released this morning. So I'm just going to kind of pick out parts that I thought were incredibly interesting. If you want to read the full report, go to the Alibaba Investor Relations, or I'll try to link it in the description below if you want to read this whole report. It's just very long, very dense. So I'm just going to pick out the parts that I find most interesting for you guys. So anyways, if we go ahead and look at Lazada, this is some performance remarks here. They said their Southeast Asian e-commerce platform Lazada continued to achieve robust growth in both buyers and sellers, benefiting from acceleration of digitalization across industries in Southeast Asia. Lazada recorded another quarter of triple-digit year-over-year order growth despite new waves of the COVID-19 pandemic in many markets where it operates. AliExpress also, excluding the joint venture business growth in the GMV, excluding unpaid orders, they've recovered to a pre-COVID pandemic level in the December quarter. That's incredible. They've recovered to that, although they are excluding a few things. But the fact is, that growth on both of these platforms is incredible. And we also see immense growth with revenue growing for cloud computing 50% year over year. That's all great news. In fact, during the 11/11 Global Shopping Festival, Alibaba provided a highly scalable, reliable, and secure public cloud infrastructure. And at peak, it processed 583,000, not percent, orders per second at its peak. That's incredible. 583,000 orders per second. They say they migrated their e-commerce business onto the public cloud a year ago. These businesses are now able to seamlessly create, upgrade, and deploy on a cloud-native approach, and this capability was especially important during the festival, helping us to improve operating efficiency and ensure business continuity. Alibaba continues to invest in research and development of leading cloud technologies to help our customers undertake digital transformation, etc., etc. So good news so far. Everything's looking good. Their financials were looking solid, really solid growth across multiple of their platforms. Revenue grew significantly, net income up significantly, margins improving. It's all looking good. They also did a share repurchase. Another good sign here. So on December 20th, 2020, their board of directors authorized an upsize of our share purchase program from $6 billion up to $10 billion for a 2-year period through the end of 2022. During the quarter ended December 31st, 2020, they repurchased approximately 540,000 of their ADSs, American Depository. So that's awesome there. Not ADR, sorry, ADSs, my bad. Anyways, guys, if we go ahead and look at their consolidated balance sheet here as well, it's looking quite healthy. Total current assets of $91 billion, total current liabilities of just $54 billion, total assets of $250 billion, with total liabilities of just $84 billion there. Total equity as well remains at, as December 31st, $164 billion. So if we go ahead and do some comparison here, I want to compare Amazon's financials for Q3 20 I want to compare it to Alibaba here. And I find this really interesting. Now, these might be slightly off here. Amazon, I don't believe, has reported its earnings yet. But if we're going to go ahead and compare these two, they make it really interesting because Amazon's last quarter, they did $96 billion in revenue, whereas Alibaba did $33 billion, so significantly less. But Amazon's operating expenses were $32 billion, whereas Alibaba's were just $7 billion. Now, if we look at net income, Amazon did $7.222 billion in net income. Alibaba did $12.17 billion in net income, 41% more than Amazon. So Alibaba made in net income 41% more money than Amazon, despite Amazon doing significantly more revenue than Alibaba. And that's mainly due to Amazon's margins here. And I forgot to throw that in apparently, but Amazon's margins are completely abysmal compared to that of Alibaba's. Alibaba's margins remain so significantly higher. As we saw, Alibaba's profit margin remained at 35, almost 36%. That's significantly higher than that of Amazon's, which remains more at the 5 to 6% level, which is incredible. And that's actually kind of high for Amazon's margins, at least profit margin as well. So that's really incredible. And the question I have is, okay, Alibaba's making 41% more money than Amazon, but Amazon's worth $1.7 trillion. Its stock is up, over 100% since its low. And if we go ahead and look at Alibaba, well, it's only worth $696 billion. So why is it that Amazon is worth more than double that of Alibaba, despite Alibaba earning 41% more in net income than Amazon? That's the question I'm trying to ask, and it really doesn't make sense. However, there are some reasons for why Alibaba is not trading higher right now, but there's also room for significant upside. And the main reason here is because there's regulatory scrutiny, especially surrounding their founder, Jack Ma. So Jack Ma criticized the Chinese government. If you know anything about the Chinese government, that's generally a really bad idea to do that, especially if you're a Chinese citizen living in China. You don't want to criticize the Chinese government. So I don't believe, and if we go ahead, they're diving in, there's an antitrust investigation, whole anti-monopoly investigation going on. Jack Ma, he was also absent from a list of China's entrepreneurial greats. He actually disappeared for a few months, although reportedly is okay or just laying low. I don't know exactly what's going on. No one does. It's all speculation. But I believe that this is simply a power play by the Chinese government to kind of shut down large corporations that maybe think are gaining too much power. They want to say, look, we know you guys have a lot of power. You're making lots of money, but that doesn't mean you can criticize us. So we're going to show you how much we can do. We're going to shut you guys down. And that's exactly what I think it's going. I think it's a display of power and intimidation factor. I don't think actually they're going to split up Alibaba. I don't think they're actually going to do too much. I don't think they're really going to cause that much harm for Alibaba besides the Ant Group situation, which I'll touch on here. So the anti-monopoly investigation, and this is directly from Alibaba's quarterly report to get their take on it. They said on December 24th, 2020, Alibaba Group received a notice of an investigation from the State Administration for Market Regulation that had commenced an investigation pursuant to the PRC anti-monopoly law. The investigation is ongoing. We're fully cooperating with the SAMR. We have established a special task force with leaders from our relevant business units to conduct internal reviews. We'll continue to actively communicate with the SAMR on compliance with regulatory requirements. We'll further update the market when the investigation is concluded. To me, this sounds like, hey, guys, like if I was going to translate this into what's actually going on, I would guess, and this is completely a guess, I don't actually know what's going on there. It's speculation at this point. But what I assume is happening is they're doing an investigation and basically just kind of having people, walk around, poke some holes, but they're not really diving into a deep investigation. I think they're simply doing this as an intimidation factor, as I stated previously. Just a show of power to express that, look, you might be a massive business, but the government is the one that runs this company, not you guys, and you guys will never have the same amount of power that we do. I think that's what the Chinese government is doing right now. I think that's why Jack Ma's disappeared. I think they shut him down. Maybe they questioned him. Who knows? I think he'll be okay, hopefully, and I think Alibaba, this whole investigation will eventually end because China, they need Alibaba. Splitting them up might actually harm the Chinese government since they're most likely significantly involved with Alibaba's operations. I think this is simply an intimidation factor to shut down other billionaires who might have ideas or to shut down large businesses who might have ideas of fighting back against the government or something like that. Now, if we go in the Ant Group situation, and this one is one that actually does hurt Alibaba pretty significantly. So Alibaba has a massive stake in Ant Group, and Ant Group announced that the suspension on November 3rd, 2020 of its proposed dual listings and initial public offering on the Shanghai Stock Exchange. So if it did that, Alibaba would basically make a ton of money. But that got shut down after Jack Ma made its remarks. And again, I think this is an intimidation factor, saying, you know what? All right, you're going to criticize us? Well, screw you. Look what we can do. Look how much power we have. And that's exactly what I think is happening. So due to recent significant changes in the fintech regulatory environment in China, Ant Group is in the process of developing its ratification plan, which will need to go through the relevant regulatory procedures, blah, 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 blah. To me, that sounds like a bunch of BS. It was more of just saying, hey, we're going to shut you down. I don't know when they're going to be able to. I think eventually they will be able to go public on the Shanghai Stock Exchange and have an initial public offering. I just think it's going to be a while until that happens. I think the investigation has to be over with. I think Jack Ma's got to come back and be okay, and then we'll see the Ant Group start to move forward. I think maybe Jack Ma might have to make a public apology. He might have to make a public statement saying how much he loves the Chinese government or something. I would not be surprised if that sort of thing happened. Anyways, guys, thanks for watching. Please subscribe. I really like Alibaba. I think when you look at its net income, when you look at its numbers, they're looking really great. It's experiencing immense growth right now. Its cloud computing segment is now profitable. I think there's significant upside for this company, but it's also a gamble when you go ahead and look at some of the Chinese regulatory scrutiny going on. Dealing in China and those markets is totally different than doing in the United States, and that has a lot to do with why Alibaba is not valued at the same level as Amazon. However, perhaps one day, if all of this regulatory scrutiny goes away, if Jack Ma comes out and he's actually alive and okay, I think Alibaba could have significant upside, especially with how much net income, with how high their margins are, and the growth that they're experiencing. Anyways, guys, thanks for watching. Please subscribe and hit the like button. Check out these videos as well. Definitely follow me on Twitter at twitter.com/StockerFinance for more, and I'll see you guys in the next video. Peace out.